After the significant drops the market has experienced in recent days, can we expect them to continue? How can this structure help us understand the price's continuity? On the other hand, how can Solana and its structures, both this trend line and this more macro-level trend line, help us analyze where the price might go next? All of this will be discussed in today's video. On the screen, we have the Bitcoin chart in the 1-hour time frame. As you can see, the price has experienced sharp declines in recent days. While, as we mentioned in the last video, we were expecting pullbacks in the price, these pullbacks have extended a bit further than we initially anticipated. But this doesn't worry us because, as we've been saying for a few weeks now, the key zone to watch in order to determine if bearish movements will start to dominate is this trend line. And as we can see, this trend line is still being respected. What does this mean? Let's break it down so you can see it more clearly. In the last months of 2024, we've observed an upward Z pattern. This Z has given us two key structures. The first is a wedge that has already broken. This very breakout helps us define and establish this reference trend line, which will indicate how long this Z remains active. We already know that Z patterns aren't meant to be reversed, but rather accompanied in their movement. However, it's crucial to identify when this Z stops signaling bullish momentum. What should we focus on for Bitcoin? We need to pay attention to this level, $91,600. But why do we expect Bitcoin's price, along with other assets, to continue falling a bit more? In fact, it might even create a false breakout below this level in Bitcoin. Now, let's move on to Ethereum. Here, we're analyzing the 4-hour chart. Notice how we have a bearish impulse followed by a corrective pause or panic. Then, the price reconnects with the trend line of this corrective pattern. What are we expecting for Ethereum? Well, we're expecting a failure in this replica of the original impulse. In other words, we anticipate the price will continue to drop, but it won't replicate the same movement as the original impulse. Instead, this blue zone we have marked here should do its job, defending the price and allowing it to continue upward. Now, let's move to the 1-hour time frame and zoom in a bit to show you why we're seeing this bearish continuation. What we're analyzing here is this structure of impulse, channel range, and climactic action. So, what are we expecting for Ethereum and the entire crypto ecosystem? We're anticipating drops in the form of climactic actions. These bearish climactic actions may happen, and likely will happen in trap zones. Therefore, we shouldn't panic if we see prices continuing to fall. What's critical is closely observing how they behave in key zones and how they react there. To summarize, what are we expecting for Ethereum? We're looking for the formation or continuation of this range below this crypto level we're mapping here. This would give us a climactic trap action, essentially a failure in the attempt to replicate this original impulse. This means the second impulse won't measure the same as the first. From there, we expect a return to bullish continuation. Now, what information does BNB bring to the table? Looking at the 1-hour chart, we can see this macro trend line, which is crucial to determine whether the bullish continuation we're expecting is invalidated or remains in play. Zooming in, notice that there's still room for a downward move without triggering any alarms. There's quite a bit of room to fall. On the other hand, pay attention to this crypto asset where we're analyzing a potential bullish accumulation process. In other words, at some point, we're expecting the price to complete its movement and then break above this structure, continuing its upward trajectory. And shifting to the short term, what are we seeing? Well, something similar to what we observed with Ethereum. Notice that we also have a bearish impulse followed by a bearish channel. Here we're expecting the price to continue developing downward, forming a range, and then giving us a bearish climactic trap action before continuing its upward move. Now, Solana also provides a lot of valuable information. Let's break it down. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
we have the Solana chart on screen in the 1-hour time frame. Here we can see a lot of information that can be incredibly useful for understanding and mapping out the entire crypto ecosystem. First and foremost, what is the super key level we need to watch? Just like with the other assets. Take a look, we have this trend line here marked in yellow where we've already had a first test contact and we might see a second contact as well. However, we can't allow the price to fall much below this line, as that would require us to reevaluate the structures. It's better to reassess at that point to understand whether we remain optimistic or if the trend begins to turn bearish. That said, similar to BNB, notice how there's still considerable room for downward movement without raising too much concern. What else are we seeing here? Well, notice that we come from a bearish impulse followed by a corrective pattern. This corrective pattern seems to have ended as the price has reconnected with the trend line. So what are we expecting? We're watching to see if the price decides to aim for a replica of the original impulse. However, as with the previous asset, we're expecting this replica to fail before continuing its upward move. Now we're looking at the Cardano chart on screen in the 4-hour time frame. And just like with Bitcoin, notice how after the significant rally of the past few months, the price price has respected the trend line of its C structure, which in this case acts as a defense zone. What is this telling us? Well, it's telling us that as long as this defense zone holds and isn't breached, we can remain optimistic. Zooming in a bit and moving to the 1-hour time frame, the chart shows us a bearish impulse followed by a descending channel and then the price entering a range. What are we expecting for Cardano? We're anticipating this range to continue before giving us a bearish climactic action. This bearish climactic action could easily reach the defense zone. However, what we don't want to see are too many traps. If we zoom out again, we can see that this defense zone has already experienced traps in the past. Therefore, we'd prefer not to see another trap below the defense zone, but rather to see the structure holding steady. Afterward, we'd expect the price to resume its upward move following the climactic action. Now, let's move on to Polkadot. Polkadot is also providing us with a lot of valuable and critical information. As we mentioned in the last video, there's a blue line here that corresponds to the POC of this entire upward move. This means the $6.19 level is a key area to monitor to determine whether the upward trend continues, or, on the contrary, if this zone is lost. If this level is breached, we'll need to evaluate what's happening in the other key zones across the rest of the assets. But it would already be a sign that we might be losing the bullish outlook. What else do we see here? We can observe a creek where we're analyzing an accumulation phase. Therefore, we're expecting this structure to eventually break to the upside. How can we anticipate this asset's move higher? If we zoom in a bit more, we can see this same structure repeating across several assets, a bearish impulse followed by a descending channel. Here, we're expecting the price to continue within this range and to deliver a climactic action. This climactic action could easily approach the blue zone. After that, we'd anticipate the price to resume its upward trajectory following the climactic action. Now, let's dive into Bitcoin analysis and take a look at why the 1-hour time frame chart suggests that further drops could happen, and why it might even give us a trap. But first, let me remind you that registration for our private channel, Crypto Insight Premium, is still open. In this exclusive space, we provide daily live technical analysis of the market, along with updates that we believe are key to staying informed. It's also a place where we share trading ideas and feedback, allowing us to grow as a community and continue learning every day. Signing up is very simple. The requirements are as follows. You need to be a user of BitUnix or buy DFI, have deposited cryptocurrencies into your BitUnix or buy DFI accounts with a minimum value of $100, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. Don't miss this unique opportunity to become part of our exclusive Crypto Insight Premium community. Come join us, we're waiting for you. Now, let's return to analyzing Bitcoin. As we mentioned at the beginning of the video, this is the key level to keep in mind to determine whether we can continue looking upward, or, on the contrary, if the bullish outlook gets invalidated. So what are we expecting? We're expecting Bitcoin's price to continue dropping, and here's why. In addition to everything we've analyzed across other assets, Bitcoin is also showing this pattern, a drop, a descending channel, and what we anticipate next is the price entering a range, followed by a bearish climactic action. This bearish climactic action wouldn't surprise us if it happens in a trap zone, meaning below the structure we've been discussing. However, after this, we expect the price to resume its upward movement. What else can we expect for Bitcoin? Take a look. Here we have this bearish impulse, combined with this anticipated climactic action. We expect the price to keep falling, which means we'll see an attempt to replicate this initial downward impulse. What we're evaluating is that this replication attempt might fail. In other words, the price may not fully replicate the size of this drop, but could instead create a trap before moving upward again. And how can we determine how far this trap might go? Well, if the price falls below this trend line we've been observing, it would be wise to look at the other assets and conduct a cross-analysis to evaluate the broader situation and consider the likelihood of a bearish trap. If you've enjoyed this advanced technical analysis, let me know in the comments. Also, give this video a like, subscribe to the channel, and click the notification bell so you don't miss future analyses. Share this video with your friends and other trading and crypto communities so more people can grow in their trading strategies. Best of luck with your positions, and see you next time.